Hello, everyone. Good evening or good afternoon, even good morning, maybe in Australia or New Zealand. Uh, yeah, is 2020 the last hurrah for fiat currency system for the petrodollar? I think it could be. If ever there's going to be some kind of crisis, I think we are in the beginning of it. I don't think it can get any bigger than it's gotten this year. Not only with this health crisis, but with all that the central banks are doing, and I don't think it's over yet. Now we've got some other kind of crisis, social unrest, and it's spreading all around the world. I know many of us know that there's a lot of engineering in all this, but if you read back in history, a lot of crises, big crises in the last few hundred years have been engineered. It's just that people didn't know at the time. We've been, with the internet, being able to learn a lot about these things. Of course, we are called conspiracy theorists. I recommend a really good book, Pawns in the Game. Is it Pawns in the Game? I think it is. Pawns. Yeah, Pawns in the Game by William Guy Carr. Uh, it's a controversial book. Actually, I don't think it's controversial. It's a really good book. So I recommend that, Pawns in the Game. I'll write it here. And he talks about these people, the internationalists, the bankers, and they are from all kinds of backgrounds. Yes, all kinds of religion. He focuses on one religion a lot, but I think we can't do that. I think there's more than one group. And the same people that were involved, they're basically the bankers. They were involved in the glory in the English Revolution, the 1600s, in the French Revolution. They were involved World War One, World War Two, and they even called for a World War Three back in the late 1800s. Pike and Mazzini. So I think this is it. I don't know what kind of crisis it's going to be. Uh, if we're going to have a World War Three, but I think things are going to get worse this year. So let's see. We've got quite a few people here already. Hi, Ben. Ben Gray's here as usual. SW. Hi, SW. Uh, I was just reading about the Federal Reserve. Yeah, they are meeting this week, Tuesday and Wednesday. I saw an article today in the Wall Street Journal saying that they're thinking of doing what the Australian Central Bank is doing, pegging interest rates by doing unlimited QE. I don't think they're going to decide that yet. That's what the Wall Street Journal was saying. They're probably going to focus on forward guidance, telling the market how long they're going to keep rates at zero. I don't think they're going to do anything more extreme this week. Yeah, but their balance sheet is going up, is around 7.2 trillion. It's slowed down a little bit, but I think they're going to have to increase it again. Professor Rogers, hi. Hi, Aaron Levy. Moon Kamar, I want to know exact gold growth rate within short term. I can't tell you that. All you need to look at is really the growth rate of money supply of the funny. Well, it's not even money; it's fiat currency supply. I can't tell you the price, what price gold will go versus the dollar or any other currency. But what I know is that it's going to be each ounce of gold is going to cost a lot more in all fiat currencies to get. And I think the problem that we're getting now that people haven't looked at, especially in the mainstream, when you watch CNBC or Bloomberg, and I think this is the big problem, it is the debt. If you look at the US debt clock, that's racking up really quickly. Uh, it's calling for like 570% of GDP, debt to GDP by 2028. And we saw last week with the stock market continue to go higher. And that's a problem, I think, for the bond market, because the bond market went down last week. We saw the 10-year yield go from around 65 basis points to almost 1%. And that's a big move. And the higher the bond yields go, the harder it is for the government to finance its debt and deficit. Don't forget, they're running 20% budget deficits now in the States, not only in the States, but here in the UK, in Europe. So um, that's why I think they're going to keep printing money, not money, let's say currency. Some people have criticized me for saying money, but it's really fiat currency. I think they're going to, the central banks, the Fed especially, they're going to have to increase the QE again in order to keep interest rates low, because uh, basically you can't have your cake and eat it. Uh, I think they want the stock market to keep going up, but that's going to give people a signal that the economy is doing well, so they're going to sell bonds, but the economy isn't doing well, as we know. And that's the real problem. I think the bond market is the biggest problem, and that's why they're going to have to keep creating more and more book entries in the central bank's balance sheets to buy bonds to keep rates low. That's going to make gold and silver worth even more. Yes, we don't go up in a straight line. There are sell-offs and spikes, but generally gold still a couple of over $200 higher since the low we saw in March at 1460. We started the year around 1520, so it's still up on the year. Silver, don't forget, had that huge spike or drop in March down to like 11, and now we're still near 17. Well, we are at 1760 or thereabouts. So I think people get too focused on the price. I think we need to think of gold as your home. If you own your home, your property, you're not checking the price every week, even though, yes, we do look at the price. We need to be less, focused on it and focus more on trying to get more gold and silver. And why? Why is that? Why do I see it like that? Well, because it's also fighting the system. If you have physical gold and silver outside the system, you're not financing Wall Street, the City of London, big government. You're not financing big government. And why would you want to finance government now? They're spending like drunken sailors. Cupid stunt, Billy Bullion and everyone. Richard G, follow you almost every day. Thank you for informing people. You're welcome, from Quebec. Can you recommend some books worth looking at? Andrew Jones. I mean, one that I really like is Fiat Money, Inflation in France. That book basically taught me that early in this century, when we saw Bernanke talk about helicopter money and and the way the system worked, it taught me that after QE in '08 that we wouldn't be able to get out of it. So I recommend Fiat Money, Inflation in France. Google that. You can get free PDF. It's basically, I think, a blueprint to what's happening now. This was in 1790s France, so I recommend that one. I recommend the Law by Bastiat. That talks more about the philosophical nature of free markets, and libertarianism. Talks about how the state is really an instrument. It can be used as an instrument of legal plunder. And I think it's a really good book that more people need to read, especially now. So yeah, those two I recommend. You can go in my channel and Google or search under videos in my YouTube channel, book stream. I've done book streams. I've spoken about books, so you can go do that as well. DMC, would you rather buy a top 10 cryptocurrency or a top 10 gold miner? I think actually that would be the same. Actually, I always think the gold miners and cryptos are kind of like provide the same leverage and volatility. So, uh, yeah, I think it's equal for me. I would buy either one. Gene Sweetman, down 9,000 by the end of 2021. Yeah, I've spoken about that level and that time frame. It's possible. I think the stock market is very dangerous right now, and we're seeing a lot of big investors, like famous, respectable fund managers, even hedge fund managers, people who have been in the business for years, saying that this is not sustainable. Of course, could go on for a little longer. I did a video in March, and I compared 1929 to 2020, and I noticed that, of course, I noted that the drop and that this year was the fastest crash ever in history. And with that, I compared it to the recovery we had from the bottom in November 1929 to April 1930. And I thought we'd take about 13 weeks from and I thought we were at at a bottom in March in the stock market, short-term bottom. And I thought we could consolidate and rise for another 13 weeks. And I think the 13th week is coming after this coming week. So I think we could be near a top in the stock market. In terms of cycles, we could go a lot higher in the next week or two, but I think we'll turn after that. And I think it's going a lot higher than I thought because the central banks have pumped so much money into the system. Last week, the ECB pumped 600 billion euros, which is like almost $700 billion, which is huge. Good evening, Graham Hobbs. Only physical gold and silver will slay the bullion banks. I was reading something by Alistair McLeod about the bullion banks. They're still really have a big short position in the futures. Yeah, on Friday, the precious metals got hit quite hard, but in all, we're still around 1,700. So I think it's getting harder and harder for them to close out their big short positions. Someone asked me before I put the live stream on. We were looking at the chat. People made comments. If it was hard for me to get Peter Schiff on for the interview, no, it wasn't. I went on his website, Euro Pacific Capital, or another one of his websites, and I contacted and I asked for an interview, and one of his assistants contacted me. So it wasn't hard at all. He's a very nice guy, I think, Peter Schiff. I enjoyed speaking with him. Yeah, no, they are. They're creating all this fiat currency, these book entries out of thin air, and uh, I think they have a really huge problem, and that's why I don't see the stock market going too much further up. Because the higher the stock market goes up, the higher the yields go in the treasuries, and they can't afford that because everyone should keep an eye on that US debt clock, not just the present rate. I think we're approaching very close to 26 trillion already, but look at the forecast for 2024. It's getting bigger and bigger, and the GDP is shrinking right now while the debt is growing up. So you can't have higher yields. That's why I don't think the stock market has much further to go, or if it does, uh, the yields are, yeah, it's like a very dangerous game because the higher the interest rates, it's going to be harder to keep the stock market goosed up. I think the Fed's going to have to step in again for more QE. I think the Bank of England will have to step in again as well. And I don't think the economies are doing as well as people think. I think the jobs number on Friday, I think the job situation is more, let's say the expectation was uh, 8 million new unemployed, and it came out 2 million new jobs. So a 10 million difference. I think we're more, the real picture is more in the middle. So I think the economy still lost jobs on in the month of May. Yes, it's going to improve, but I think yeah, I just saw something that's saying that there's a survey and 80% of Americans think what's the survey here I just saw in the Wall Street Journal. 80% of Americans say the country is spiraling out of control, poll finds. So I think there's so much division in the states, and it's spreading all over the world as well. Even here, we're getting these protests and riots. So there you go. I think the Bank of England is gonna do. They're gonna come up probably with another 100 billion at their next meeting. They came up with 200 billion in March, I think. The Bank of England, though, they ride on the coattails of the Federal Reserve. So yeah, and you've noticed as well that as the stock market has rallied, the pound has rallied. But I think when the stock market turns, the pound will go back down. Yeah, the Fed's balance sheet right now, David Bradley, from that, this is from Fed data. St. Louis Fed is just over 7.2 trillion. The growth has kind of slowed down, but I think it's going to pick up again. They'll have to accelerate because if interest rates start going up, and I think that even Trump, even though he thought it was a great jobs data, he says, "Oh, we need some more stimulus." So probably another trillion. I think the Democrats are looking at more stimulus, and I think with the social unrest is going to be an excuse for even more government spending, which I think is a really bad thing in the long term. Uh, Everyone's gone too Keynesian. Everyone thinks that government has to do things. I don't see any politicians or neither a party on either side in the US or in the UK talking about maybe smaller government, less taxation. It's all about infrastructure, government projects, government taking over businesses. Uh, it's not really a good thing for prosperity. We need smaller government, and I don't think we're going to get it. Yeah, 105 thumbs up, maybe a few more. We got 416 people watching, which is pretty good. Yeah, June 12th, 1776. The stimulus is really helping the big corporations, the 1%, Wall Street, the general public, in my opinion, they're getting crumbs. So, yeah, I'm still not convinced about Trump. He does a lot of things that seem to be good for the general public, but at the same time, he's too divisive. And someone that wants to unite a country can't be like that. But of course, he does have a lot of opposition, and it's a pretty rabid opposition. So I can understand uh, why he sometimes comes out as he does. Brady girding Trump Sanders 2020. Yeah, that would be a good ticket. They're doing, they've adopted all of Bernie Sanders' policies. Government is really involved in bailing out the whole system. Well, this is the everything bubble, and that's why I think there is a good chance that we will see it won't be that fiat currencies will disappear, but I think we've had 25, 30 years of relatively stable currencies, especially the dollar. I think it was after Volcker, the dollar became more stable, but I think we're going to get to a period of a lot of fiat currency instability. And that's what I mean by my video title today. And I think we're going to get rising prices, not just in the stock market or in bond markets, but in consumer goods, in everything that you need to survive, the general public. Everything is going to be more expensive. So that's what I mean by the fiat currency last hurrah. I don't think they're going to get away anymore with all the money. Well, fiat currency printing, because it's not money what they create. Only gold and silver really are money. Yeah, Deutsche Bank is Donald Trump's bank. That's right, or the Trump organization. My tinfoil hat housing. Um, it's a tough one, housing. I think they're going to do everything to keep it going, but I think it's going to be harder and harder to buy and sell houses. So even if the price looks like it's still quite high, it's going to be very hard, I think, to liquidate houses and to move. It's going to become more and more like a third world country where the liquidity for real estate is not as good. Metallic miner, UK silver returns capital gains tax free. Yeah, because they're coins of the realm. That's why they're legal tender, even though no one uses them for, you know, in commerce. The same thing with sovereigns. Hyperinflation. Yeah, I think hyperinflation is a definite. How can I say scenario that could happen? It's getting more and more likely because the central bankers they don't want to let anything liquidate. They don't want to allow business to fail. They don't want to allow debt to be wiped out. So they're creating more and more debt, and I think it's a big danger. A lot of people say, "Oh, it's different. That was Zimbabwe or Weimar Germany. It won't happen now," but it could happen overnight. First, we'll probably see consumer goods prices rising, and then people are going to start losing confidence. And when they lose confidence, then you get the hyperinflation. And hyperinflation usually doesn't happen in an economy that's growing a lot. It actually happens during a depression in an economy, and this is what we have right now. I know it's been artificially created, this shutdown, but be as it may, it is a recession. We're seeing economic activity drop quite a bit, but we're seeing a lot of credit and money supply created. It is seeping through to the M2. I think M2 is growing at around 70% annual rate, which is huge. Uh, Sorry if I don't see everyone's questions. There's quite a few people here right now. Let's have a look. Okay. Andrew Bennett says money velocity needs to restart. Well, I think M2 velocity is underestimated because they've added the excess bank reserves that stay with the Fed. That's why the velocity looks lower. But it could flip like that because it's all about confidence. So velocity or whatever could flip very quickly. So I think the seeds of hyperinflation are there. Uh, it's always difficult to know when, but when it does start hyperinflation, it doesn't last very long. It lasts a few months. Black lighting, thank you for your super chat. Are they creating a situation that will block people from becoming rich from Bitcoin because it's so undervalued? That the price will explode too quickly to accommodate slow-paced weekly investment. Well, I'm not sure what you mean by that. Are they creating a situation no block? Well, Bitcoin already has gone up so much. If you look back 5, 6 years, it was less than $100, and now it's like 10,000. You can still buy fractions of Bitcoin. So I'm not sure who you mean by are they, who they are, but I think Bitcoin will probably do well, but we had a blow off top in 2017 at $20. And just like gold in 2011 had a blow off top, and it took, well, we still haven't reached that high in US dollars, even though we've seen new highs in all fiat currencies this year in gold. So it's taking a long time for gold to get back to the old high. So I think Bitcoin still has a few years to go until we see new highs above 20,000. So I think we got time on Bitcoin. No, US job figures, they were kind of, there were some things that look strange. They did add like some jobs, like they added 435,000 new businesses or something. But I think the other thing as well is that the forecasters, the economic, how can I say, projections, we've never been in a situation where the economy does what it has done. So I think there's a little bit of that. So I'll give the BLS a bit of credit. But and I also think they actually admitted that they didn't include millions of people in the survey, and if they had, the rate would have been like 16% unemployment instead of 13. So they actually admitted that, but no one's really going to read that. It's just a headline, and then President Trump tweeting about it. Low blood pressure. I'm losing faith in precious metals. The Fed looks like they can do this for another 50 years. Well, 50 years ago, the $1 would buy 1/35th of an ounce. Now it buys 1/1700th of an ounce. So I'm actually losing faith in the Federal Reserve. I think low blood pressure, you need to be more patient. Uh, I started buying gold in 2002, and it has been frustrating at times, but in the long run, it protects you. But if you're losing faith in precious metals, that's up to you. Go and put your money with JP Morgan or other banks and lend them, because that's what you're going to be doing. You're going to be lending to the bankers if you put your money back in Federal Reserve notes, because it's an unsecured loan. So it's up to you. Yeah, the Continentals, I guess that went, well, that was hyperinflated, wasn't it? Just like the greenbacks as well after the Civil War. That's why you should never have paper money. I think the current federales, the federales are going to hyperinflate as well. So you had the Continentals, you had the greenbacks, and now you have the federales, which is the Federal Reserve note, that's going to be hyperinflated. David Rodriguez, do you think what do you say about 9-day EU bull run? Lagarde pumping. Yeah, they announced 600 billion. So yeah, they had announced 750 billion in March. Yeah, the euro is doing well. So is the pound. So yeah, it's more like a dollar weakness, really. Uh, the thing about the euro, everyone's always gloom and doom about the euro, but the euro was launched at €1 was buying less than $1 when it was launched. I think it went down to 82 cents. And then in 2007, it went up to like 160. And now we're around 114 or whatever it is. So actually, in the 21st century, the euro has outperformed the dollar. So yeah, there's still a lot of people who think the dollar is really strong. Yeah, it is has been strong since 2008 bottom, the dollar index. But since the beginning of the 21st century, actually the euro has gone from 82 cents all the way up to like 160, I think. And now it's at 115 or 114. So yeah, it has come down, but it has remained quite steady, the euro. Johnny Kipping, is 30% of your total financial worth in gold enough? Should I buy more? Gold is going down at the moment. Uh, well, I think that personally, I think not having gold is the most dangerous thing you can do to keep your wealth in paper money. So I actually personally, of your liquid assets, only having 30%, I think is for me, it's not enough. I want to have as little paper money in the bank as possible. And gold is actually up on the year, actually in every currency. Yeah, it's come off in the last week or so, but the central banks can't stop creating more and more credit and funny money out of thin air. They have to. They don't have a choice. If they stop it, everything implodes. And even if everything implodes and we have a deflationary collapse, gold will do really well as well. It did really well in the last deflation we had. And by deflation, I don't mean what we're told nowadays that deflation is, like a low CPI or a zero CPI. No, deflation is when money and credit is extinguished, like we had in the 1930s in the US. And gold did really well. Gold was revalued by FDR, or the Gold Reserve Act of 1934, from $20.67 per ounce to 35. And gold was so precious during the Great Depression that Roosevelt had to ban people from having gold. So whatever we get, and I think we're going to get the hyperinflation first, and maybe we'll get a collapse after that. Well, we will get a collapse because hyperinflation is collapse. Or even if we don't get hyperinflation, we get a deflationary collapse. Gold is going to be the place to be. So there you go. And it's up to the individual to decide how much gold or silver they want to hold. It's like savings. That's the way I look at it. How much do you want to save? Yeah, gold has come off quite a bit in pounds and euros, mainly because it's come off a bit against the dollar. But we've seen the Fed provide a lot of lines to the Bank of England and the ECB, and that's helped those currencies. The dollar's gone down quite a bit. The dollar index and gold has gone down with it. That's why it's. But you still probably won't be able to find gold at 13.30 an ounce if you want to buy real gold in the UK, and you're probably going to still have to wait. So that price is not going to be there for too much longer, I don't think. Brady Girding, 6 months cash. Uh, I don't think you need that much. I'd rather have the precious metals. You can always convert it if you need the cash. Maybe 3 months cash, I would say. Hard Rock, no, the UK never stopped people holding sovereigns. What they did in the 60s, I think 66 to 71, for 5 years, you could only buy, I think, 6 sovereigns a year, but they never really stopped people from having it. And you had to report it to the Bank of England, I think, if you had more, but I think people just didn't. So they never really confiscated it, but they controlled how much you could buy. Low blood pressure, what would you do when the man comes to your door to take your gold? Well, in the UK, gold is legal tender. It's money. So, yeah, that would be mean the government basically knocking on your door to steal from you. And I don't think we're at that point. I don't think it's that bad in the UK. I know they've locked us up for months, but I don't think that will happen because there's a lot of people. I think at the top, the establishment, they have gold, and I don't think they want to do that. Very few people, very small proportion of the population has gold, so I don't think they're going to bother with that. But anything's possible. But they could come and get your paper money as well. But so I'd rather have something that holds its value. They could bail in your bank account at the bank. The enslavement of Western civilization. Bullion is fine. Proof is more for collectors, and there's an even bigger premium for proof coins. All you need is normal bullion coins. Why does Japan not have hyperinflation? Well, actually, the currency has hyperinflated quite a bit. Uh, I think the ounce of gold was about 60,000 yen in the mid 90s, and recently almost got up to 200,000. So, if you look at in terms of real money, the yen has been hyperinflating or being inflated away its value versus real money. Yeah, in Fiat, yeah, it looks like the economy hasn't done well at all. But the other thing about Japan is that Japanese are big savers, and the Japanese economy is still very productive, and they're actually a creditor nation in terms of not creditor nation, but yeah, the Japanese are big savers, so they finance their national debt through savings. I know the Bank of Japan now is buying it as well. But eventually, I think uh, when gold goes to like 500,000 yen, that's that's the hyperinflation, and we're seeing it happen in all the countries around the world. This year, every fiat currency except the dollar made a new all-time high. So that in itself is hyperinflation. Bars over coins for gold. Well, it depends. If you're a multimillionaire or billionaire, yeah, it's worth having a few 400-ounce bars. But if you're buying 20,000 pounds worth of gold, I recommend the sovereigns. Thank you, the watcher, for your super chat. Says just a thanks from me for all your hard work. Really appreciate it. Cheers. Oh, you're welcome, the watcher. Thank you for your donation. Yeah, that's right, Cardinal Sin. That's the way to look at it, that you can still buy gold for the prices that we see today. That's if you can get, the price. I will bet anyone that they can't get the exact price that you see on the screen from your dealer. There will be a huge premium. And looking back, I did a video, I think yesterday, about the first time I bought gold, and I still got the receipt. It was 225 pounds and 45 pence for 1 ounce. Looking back, I should have bought loads more, but you never do because you're not sure. And I think we're at the same kind of inflection point that we were 18 years ago. If you look at gold as well versus or commodities in general versus paper assets like the S&P or Dow, it's at the lowest level ever in the last, well, not ever, but in the last 120 years. So we are the most undervalued commodities versus paper assets, especially the Nasdaq. So I think it's still, yeah, I think we're still not nowhere close to the third phase of the gold bull market. I think the first phase was 2001 to 2011. The second phase was the correction we've had. The third phase is always the biggest leg, and that will start once we break 1920 in dollars, US dollars. £334 for a sovereign from Atkinson's. Yeah, it's still quite expensive to buy it. Let's see, 334. That's equivalent of 1,418 pounds, and I think we were at 1,330. So you almost paid £100 premium, equivalent to an ounce. So the way to work that out is to take that 334 and divide it by 0.2354. That's a big premium still. Professor Moriarty says he invested in casked whiskey. That's good. Yeah, I mean, I'm happy with the wine I bought, the Italian wine. I haven't opened it. I bought a case of 6 of them. They're it's one of the best Tuscan wines, and I got it with money I didn't know I had. I had some Hive cryptocurrency, and when I found out about it, Hive was almost at $1. So, and I found out I had quite a bit of that, and I sold it for Bitcoin, and then the Bitcoin into Fiat, and I bought the wine. And Hive now is like less than 30 cents. So I'm glad I did that. But the wine is a long-term thing. Maybe when I turn 60, I'll open one of the bottles. We'll have a nice dinner. But that's still far away, a few years. Jay says the $50 1 ounce gold coin in the US, $1,850. So that's almost $200 above the spot price. Tyler Woods, have you checked Hex? No, I haven't. Decentralized interest. No, I haven't. TurboStar, 100 pound premium. It's been normal for the last few months, but last year and the year before, it wasn't normal, 100 pounds. I think it's just a reflection, the fact that the paper price is not really real. And yeah, and the more they try to keep the paper price from rising, the higher the premiums are going to get. And eventually they're going to have to let the price go. No, yeah, I think if you were fortunate enough to have some extra fiat currency in your bank account, it's always good to dollar cost average. That's right, Lily Robin. It doesn't. It does preserve your wealth, but I think it could even, in a monetary crisis, it could even like uh, m- help you get richer. Actually, so yeah, there is in a monetary crisis, and I think we are closer to one. It could help you actually do really well. There's a story of someone in Weimar, Germany. A young guy got a 1 ounce double eagle from a American tourist, and he was able to put that down to buy a hotel during the hyperinflation. John Meyer, thank you. Thank you very much for your super chat donation. Bobby 8270, where's the cheapest to get a sovereign? Well, you have to do your homework. I don't know right now. I haven't looked, but yeah, you just have to search. The other thing you need to do is to make sure that some bullion dealers will say, "Oh yeah, they'll have a really good price," but then you find out that you're only going to get it in 2 or 3 weeks, and then you have someone else who has a slightly higher price, but you're going to get it the next day or in 2 days. And it depends how many you buy as well. If you only buy one sovereign, the price is going to be higher, and the more you buy, the lower the price. And you need to compare as well all the different bullion dealers. The prices at different levels of amount that you're going to buy. So I don't know. You need to do your due diligence yourself for that. The unspoken Scott. Well, silver in pounds. There's a lot of people who think we're going to go to at least $50 or even break through $50. So I think we'll go above 50 pounds eventually. I guess it depends on the exchange rate as well. If we get to $50, that means silver is probably around 40 pounds. Hard Rock says he heard a story that a city block in Berlin was purchased for 25 ounces of gold. Well, there you go. Yeah, I think it it, uh, it could be interesting. Um, Even though the powers that be are continuing to try to bail debtors out, and that doesn't help people with gold, but they can't do it forever. So that's why you need to be patient. Low blood pressure said he's losing faith in gold. I think he's just losing his patience. Paul Flaman thinks we will break $50 in 2045. I'm not sure. I think it could be before that, actually, Paul. Aside from precious metals, yeah, as I was saying earlier, I bought some wine for investment. I have bought some mining shares as well lately for my ISA. So GDX and GDXJ. And I bought some Jim Sinclair's company in Tanzania as well. And the other thing I'm trying to do is just keep, working on my videos every day, doing interviews. I do get, an income from YouTube through the monetization with the adverts, which I know sometimes it's a bit annoying, the adverts, but it's the only way that it's a way of giving people the information for free because information costs. uh, I'm not a charity, and a lot of the stuff that I know is from years of hard work and studying. So, yeah, and that's what I'm focusing on, and it's going well. But it's taken 5 years to build it up. Yeah, that's right, Lily, Robin. Gold is very steady, very stable store of value. Yes, sometimes you get a spike in the value of gold, like they did in Weimar, Germany, where you could buy a block of a city block for 25 ounces. But generally speaking, yeah, you get the same that equivalent that you could get with an ounce of gold in Roman times than you can get now. So, like you said, it's the fiat currencies that lose their value. But unfortunately, we look at it in terms of the price of gold. We should look at it, how much is a dollar worth or a pound. So the more it drops, the bigger the fraction becomes. 1/500, 1/1500, right? Full of hope. Thank you for the super chat. Silver Britannia's from Gold Core in Ireland, but gold expensive. Okay. Thank you, Carlos, for your super chat. We will see inflation in U.S. Will we see inflation in U.S. Treasuries first in corporate bonds? Where will inflation show up first? I think inflation really, Carlos, is the real definition of inflation is the increase in the money supply in money and credit. So we are getting that. M2 is going up by 70%. So that's the inflation rate. Annualized right now is 70%. I think what you're asking about is the CPI. Well, they've doctored the CPI so much, and I recommend you watch Greg Hunter's interview with Shadow Stats, John Williams. And he said that if you calculated CPI, how they did in 1980, we'd be around 9% right now. And that's after the drop in the oil price. So U.S. Treasuries, the Treasury yield is not really reflecting the price rises. And why is that? Well, because they've been manipulating that. The central banks have been buying all these bonds and to manipulate interest rates lower. Hope that helps. Mr. Fedupable, I don't believe in food inflation. Inflation is a monetary phenomenon. I think what you're talking about is higher food prices. That's a consequence of inflation. We need to make sure that we understand that inflation is a monetary phenomenon and that's it. There's no such thing as food inflation or air travel inflation or medical inflation. Uh, these are prices rising. It's your dollar or your pound that's buying less food because the central banks created so much of it. So that's the way we got to look at it because that's the way they fool people. They think, oh, inflation isn't high, it's just food inflation. No, it's food prices are going up because of monetary inflation. I'm not trying to have a go at you, Mr. Fed Upable. I'm just trying to, yeah, it's one of, I'm just trying to make it clear. I know I make mistakes as well. When I talk about money printing, someone made a comment the other day saying, oh, it's not money printing, it's currency printing. And he's right because fiat currency isn't money. Low blood pressure, what's the difference between supply, demand, price, rice, monetary supply? Not sure maybe you could rephrase that. I didn't quite get that. Uh, Art Forsberg, 1 ounce, bought a suit through history. Well, it's a good quality suit. It's like a tailored suit. Here in the UK, I mean, a Savile Row suit is like 3 to 5 thousand pounds. So yeah, you can get a cheap suit for a few £100. But I think what they mean is like a very good quality toga in Roman times and a quality pair of sandals. So yeah, it's a bespoke suit. Derek Barwise, stop buying cheap suits. Abacentry, can you explain why sterling went from 121 to 125? Well, if you remember in March, it was at 114, and in a matter of days, it went to 124. Well, that's because the Federal Reserve is doing swaps. So swaps are off balance sheet exchanges. So the Fed gives the Bank of England dollars, and the Bank of England gives the Fed pounds, and it's all off the balance sheet. So the Bank of England gets those dollars, and they sell it in the market to buy pounds to make it go up. It's all artificial. It's not real. I'll take a few more questions. We're almost up to the hour mark. What is a good buy price for $1 face value of junk silver? I haven't really looked at those prices. You just need to do your homework. I'm not the silver dollars. I haven't looked. They're probably going to be, I don't know, 20 to 30 bucks. I'm not sure. I haven't looked at them recently. Full of hope. Sorry, the unspoken Scott. What will we look out for signs of a collapse? I think it's all around. The fact that central banks are having to bail everyone out, that's the fact that things are collapsing. The question is whether they will succeed in bringing the economy and loads of bankrupt companies back into life. That's still the verdict is still not out. Okay, everyone. Thank you very much for showing up. Thank you for your support. And I wish you all a great week. And we'll keep in touch. Take care. Bye. Billy says goodbye as well.